Good evening and welcome to today's webinar on Career Insights into ESG Investing, hosted by CFA Institute. I would like to take a moment to welcome our audience from around the world joining us remotely today. I'm Dr. Monica Chopra, CFA, and I'm a faculty of finance at International Management Institute, New Delhi. Here, I'm also the chair of PGDM Banking and Financial Services program. I will be the moderator for today's webinar. Now, before I introduce the speaker, I have a couple of housekeeping notes. Today's webinar is scheduled for 60 minutes, including Q&A, with 45 minutes of presentation and last 15 minutes for Q&A session. We will be leaving time for Q&A after the presentation, so please feel free to submit your questions throughout the presentation. You can do so by clicking on the Q&A icon at the bottom of your viewer and typing your question in the box. The webinar presentation will be available to view in the chat box after the presentation concludes. We value your feedback, so please complete the evaluation survey before you sign off today. And now, it is my pleasure to introduce our speaker for today's webinar, Mr. Lokesh Mrig. Lokesh Mrig, CFA FRM, is the Vice President, Quantitative Investments, SSGA India, where he is responsible for quantitative investments function, working closely with global quant research and portfolio strategy teams across asset classes. Before joining SSGA, Lokesh was a senior quant equity research analyst at MSCI and has also held the role of portfolio manager with Principal Investments Group of Motilal Oswal Securities. Lokesh holds a master's degree in management and finance from Duke University and a bachelor's degree in technology from IAIP Madras. Welcome, Lokesh, and request you to kindly take the webinar forward.
Thanks, Monica, for the introduction and warm welcome, and thanks CFA Institute for giving me this opportunity to speak on such an interesting and trending topic. I'll focus on three broad areas today for our audience benefits. Of course, I'll cover in brief what's ESG investing. I'm sure more or less everybody is aware, but I'll still cover some basics and give an idea why it's trending so much and some of the recent trends within the field. And also then I'll focus on key industry players and related roles. And from there on, we'll dig deeper into some of the career paths, opportunities, skill sets which are required. And finally, I'll kind of talk about why it actually makes sense to pursue the career within this field now. What is ESG investing? I think a lot has been talked about this, and you can find a lot of definitions online. There are a lot of other terms being used for the ESG investing, called sustainable investing and then impact investing. There's a lot been written, but I'll try to summarize it I'll put it in a couple of categories. So I'll use ESG investing and sustainable investing in kind of same bucket, and then impact investing in a different bucket. ESG investing is as a whole is kind of widely understood or can be defined as a process mechanism where you can consider some of the non-financial factors like environmental, social, and governance into the conventional valuation techniques. You have free cash flow modeling when it comes to fundamental equity research, dividend discount models, and these are the conventional techniques. When you take into account the non-financial factors like environmental, social, and governance, that process of integrating these factors into the conventional valuation techniques is what I call is the ESG investing or sustainable investing. And now impact investing, we're not talking about impact investing. This is, of course, webinar is focused on more on the career insights, so I'll not go deep over there, but impact investing is basically a process which should, or effort which should result in a positive social and environmental outcome as a result of the investment process. So the main difference is in ESG investing, we are aiming for a positive investment outcome as a result of considering non-financial factors, whereas in impact investing, financial returns are not the priority. The social and the environmental outcomes are the priorities. So these are the two broad categories, and I think we'll talk more about the ESG investing in which is dominating the current ecosystem. So why ESG investing is on rise? Why suddenly it's trending so much? I mean, I think it's mainstreaming as we speak today, post-pandemic, and who are the driving forces behind? So we'll have to, understand from the perspective of key stakeholders, uh, uh, the asset owners or the big pension funds around the globe, or insurance firms, endowment funds. Uh, they have an indefinite investment horizon, right? They are perpetually invested. It's not for next 5-10 years. They'll raise a fund and then close it. No, so they have an indefinite horizon, investment horizon. So I think early in 2000s, as they started seeing some of these issues impacting their investment, uh, the overall consensus within that community in Europe specifically was that if we do not consider ESG issues, a long-term sustainability of the capital markets may not hold, and we may suffer downturn in returns as a result of whole world or economies and capital markets getting impacted by these factors in the long run. So this started, as a driving force in Europe, and UN, of course, partnered with them. We had, UN Paris in 2005, and then a big event was 2015 Paris Agreement, and of course last year COP26 was also a key kind of a landmark year. So that's how I think I'll say asset owners were the driving forces, and now asset managers and other key players are jumping in that bandwagon, because I think they'll have to align with what investors are looking for. Also, ESG factors are now increasingly viewed as financially relevant. There is no doubt that in the long run, these factors help enhance uh, the overall returns for the capital markets as a whole, as well as for portfolios. Though there are always some debate going on in terms of short-term returns. However, you should also look at the investment risk factor. If you look at the risk factors, there's a broad consensus that these factors help manage risk better. So they are financially quite relevant, and they're increasingly being viewed put in that category now as compared to let's say 10 years ago or 5 years ago. Other important factor in rise of the ESG investing is availability of data and technology, which is helping make that data available to us. There are a lot of, must be aware, there are like hundreds of ESG data and ratings providers, so they are helping the ecosystem. We can actually measure the ESG performance of our portfolios with click of a button now, thanks to the rise in data. And and there have been more and more studies being out there. 21 meta study by New York University's Center for Sustainable Business. I think they come up with a meta study covering 1,000 studies which studied the performance of the ESG factors, or how ESG was impacting the portfolio performance. They came to a conclusion that ESG is helping the portfolio performance, and that was the conclusion. So there's more and more evident that it helps integrate ESG for better investment outcomes. And lastly, the younger generation they're quite aware of these issues, as of course they are quite they're also participating in terms of pushing towards this trend, as some of these issues going to impact them more than some of us who were born before. So they are really like a driving force. They're also a driving force behind this trend. I'll then kind of cover some stats, and how rapidly it's rising, the whole ecosystem. There are a lot of you can see in news how much inflows are going in different funds globally as well as in India. A study by Bloomberg Intelligence, they're saying now $50 trillion plus AUM should be aligned within the ESG ecosystem by 2025. India should also see a scale up in ESG assets. And it's not only public equities, the private investments or the private equity funds are also coming in that bucket now, and they are hiring more ESG focused professionals, as well as building those teams, as some of these consultants who select these private equity investments are asking for a lot of questions in terms of how they're incorporating ESG into their investment decision making. And also sustainable bonds are another big area. It has exploded in the last couple of years. Just last year, $1.6 trillion of sustainable debt was issued. So big, rapid change, a lot of growth, in recent times. Just to look at some stats, as I mentioned, if you look at historical, if you look at the table on the left hand side, historical trend, this is a study by Bloomberg Intelligence. Just in last, I think 6 years, the assets under management have been more than doubled from somewhere around $13 trillion to more than $30 trillion as of 2020. These are the old stats, but it shows how much, a growth is there within that ecosystem. And if you look at the projections, again by Bloomberg Intelligence, we should have more than $50 trillion by 2025. So tremendous growth from again 30 to 20 50 trillion dollars, and then these are just estimates, and most likely you should expect basically the actual assets by that time on the higher side of these projections given the trend. Now, what are some of the recent trend within that ESG ecosystem? First of all, everybody is aware of the climate change issue. So I can say that climate change is being positioned as first among equals. A lot of efforts, capital is being going over there as a result of Paris Agreement and UN efforts, and the government governments are more and more are now aware of the risk the climate change poses. So there's investment communities also running behind. That's a big focus area, followed by social issues in the supply chain management, human slavery, bonded labor. That's a big issue for investor community when they're evaluating the firms in the ecosystem. And also, as I mentioned, growth in sustainable debt markets that's exploding. It's primarily driven by sustainability linked bonds and loans over the last couple of years. And of course, green bonds and social bonds are also contributing to the growth. I'll say in last 4 years or up to now, I think more than $4 trillion of sustainable debt has already been issued. So it speaks about the scale and the volume of the activities over there. Another interesting area we're seeing is the regulators are now coming together to come up, with more standardized, regulations in terms of how the disclosure should be and how firms should be monitored with respect to their ESG activities. Still in early stages, but we should see more regulators, coming up with guidelines. And of course, reporting standards. There are a lot of reporting, standards driven by private groups, governments, UN, and public-private partnerships. But there is now a consensus that we should probably go towards a direction where there is a standard and agreement globally. But still, these trends are in early stage. Now, coming to key industry player. Now, of course, as I mentioned, asset owners were the one who started this, kind of demand, and then asset managers, of course, now are driving force as they're coming up with more products and funds to cater to the demand. And then the other industry players around this ecosystem within the ESG investing, like public and private corporations, data service providers, consulting firms, and banks and insurance. They're all kind of now increasing their efforts towards this space. And like a lot of corporations now coming up with their sustainability practice, and they are repositioning their CSR efforts more towards ESG. And then the data service providers, as you might have heard, a lot of them, like raw data providers like Bloomberg, Refinitiv, FactSet, and then a ratings provider, S&P, MSCI, Truecost. They're all they're all contributing to this ecosystem, and that's one big growth area. And then of course consultants are key, a key player here. They are setting up a lot of in-house teams and helping these others key players meet their ESG and sustainability objectives. Banks and insurance firms are also increasing their presence in this area to ensure they can consider these factors in terms of how they are lending and how they are underwriting some of the insurance policies. Now we'll come to so the key opportunities among these industry players. Now I'll cover asset owners and managers, I think, with details. So it's pretty interesting area and exploding quite quickly. There are two streams efforts here right now. If you look at the ESG career paths, there are conventional uh, uh, career paths who are now integrating ESG when they're managing money or where they're researching for stocks or for asset classes, and then there are dedicated ESG teams being formed within asset owners and asset managers, in house, and these are ESG specific SMEs who may or may not have a conventional investment background. The reason why we have this ecosystem with two efforts coming together to achieve the outcomes is ESG is rapidly so fast and it's evolving so quickly, is that it's difficult for like a regular portfolio manager or researcher to be able to do their job as well as catch up to the pace of the evolution in the ESG space and then be able to integrate that. So it's like doing two jobs. So to help that effort, I think a lot of asset managers and owners are coming up with their dedicated ESG focused efforts, which are working with other uh, asset class teams of portfolio managers and researchers to help integrate ESG issues into their process. So if you look at some of the conventional roles, you have ESG researchers who are focusing a lot on data and ESG models. And then there are portfolio managers focused on managing ESG money. Uh, uh, I mean, of course, for them, it's important to have a strong ESG expertise too. There are more and more such roles are coming up. Investment strategies, ESG strategies, who can help position firms, their products better in the market. More of these roles are coming with ESG focused background as a requirement. Then asset stewardship efforts, the ESG activism, that's a key area of growth too for the asset owners and managers. So a lot of roles surrounding these four areas. I won't say this is the exhaustive list. There are a lot of other roles, but these are the main and key popular areas. Now coming to data providers and ratings firms, there's explosion over there in terms of the roles availability. Research being one area, and that focuses on how to come up with models to score companies. That those are quite interesting and I think important roles for the ratings providers. And then data analyst roles are quite critical too. The data has been an issue within, the data quality has been an issue within the ESG ecosystem. So data analysts play a key role in terms of capturing data from the companies directly or from the data providers and helping process it in a format which can then be ingested by modeling teams to come up with ratings for individual firms. So those roles are quite popular and critical, I'll say, for a rating provider. And then a new growth area has been the ESG, portfolio analytics or portfolio reporting. As of course, there's a lot of demand from clients or asset managers and the owners in terms of how they can look at the performance of their portfolios from ESG perspective. So rating providers are filling that gap, and a lot of roles in that area is coming up too. Now, looking at other industry players, we have banks and insurers who are also expanding their presence here. We have they of course have to have risk managers with ESG expertise so that they can help evaluate these considerations when they're lending or underwriting insurance policies. They're also expanding their capabilities in terms of gathering data, or have data analysts who can gather information on ESG issues with respect to a particular investment or a potential asset where they are underwriting policies. Customer engagement is another area where insurers are expanding their ESG presence to engage with both stakeholders, for so the clients as well as and their investors. Uh, Public and private corporations, as I mentioned, a big growth over there in terms of, I think you'll see every other company, they are now setting up their sustainability practice or sustainability strategy teams, which are looking into how firms are considering the ESG issues within their operations, day-to-day operations, and they also help them aligning their long-term policies towards that. So a lot of roles in that area, and they're quite critical. And because of course investors are demanding more and more positive ESG outcomes, so firms have to respond, and that's why you are seeing a lot of roles in that ecosystem. uh, Another area where I think if you see some of the CSR activities, they are being positioned now to align with the ESG outcomes, that's complementing their sustainability practice efforts. And there are quite a bit of, I think, roles in that domain too. Consultants, of course, if you look at, talk to any of your friend within that domain, you'll see that they are setting up a lot of sustainability practice, or hiring for ESG consultant roles. And these consultants are, of course, completing the ecosystem by advising all other key players, including asset managers and owners in that ecosystem, not only the other, large private and public corporations. And of course, consultants are also spending a lot on, and capturing data and researching these trends, so that they can advise their clients in a timely way. So that's another, I think, area which is growing from ESG career perspective. Next, I will look at what are some of the key skills, when you are applying for ESG roles. So one thing you have to understand is, this area is rapidly evolving, right? Every other day there are new changes happening. So first thing anybody would look for is strong analytical skills, so that a candidate or employee can ingest a lot of information and help deliver on key analysis. Since there's so many changes happening, we look for strong analytical skills or ability to process large amount of information which is rapidly evolving, so that they can help the whole kind of ESG ecosystem within the firm. Also, you have to demonstrate a strong interest and belief that you believe in the ESG as a concept, right? If you come across someone who's going there just to probably get a lot of roles and money, it's not necessarily going to work out. So you have to demonstrate strong interest and commitment to ESG. And also having knowledge of sustainable financial products helps. I'm speaking of, sorry to interrupt, I'm speaking of skill building, but yeah, these are applicable to other areas as well. So understanding of financial products, sustainable financial products and key ESG trends also showcase your interest and commitment. And I'll say, if you are pursuing a role or applying to asset managers and owners, I think it's important that you have certain track record, either via conventional investment experience coupled with strong ESG interest or ESG certification for certain senior roles. For entry level roles, if you have if you're pursuing CFA charter and you are showcasing your interest in ESG via either CFA ESG certification or other certification courses, I think that is important. That's what we kind of kind of look in candidates. And lastly, most important thing is like, one of the most important factors is that it's important to be tech savvy. This field is evolving so rapidly that there are so many tools coming up, and so it's important that you are comfortable with these tools, as well as it helps if you can do a little bit of programming, SQL programming, or if you're comfortable with a little bit of Python. That kind of helps in, I think, these roles within the asset manager domains, asset management domain. Plus also, I think some of these skills are relevant for other industry players. So what are some of the expected career paths within, I'll say, asset management and owners domain? So if you are aware of this domain, you should understand that these hierarchies are pretty flat over there, in terms of they are usually team efforts when it comes to managing money and researching new models and stocks. So however, still you can expect an entry level role where you're starting as an analyst, either a researcher or a junior portfolio manager, helping manage money or researching new stocks and models. And over the time, you can expect growth in terms of getting more exposure to different sectors, different areas, and potential to kind of mentor the junior analyst over the short to medium term. And then over the long run, you can expect to lead a particular sector, or a sector or research team. And then very long run, yeah, of course, you can expect to be in a head of, let's say, ESG research or head of ESG portfolio management. So I've covered this career path from asset management and owner's perspective, given this webinar is focused on ESG investing. Of course, the career paths may differ if you, look at private and public corporations, insurers, as well as consultants. Um, so, but how should we go about skill building? And what I'll say that I'll emphasize that CFA ESG certification. I'm also pursuing that currently. It's a great way to demonstrate your commitment and be able to gather holistic knowledge and valuation and portfolio construction techniques in a very cost-effective way. So that's a very good tool. And then of course it's recognized by industry now. It's recognized by United Nations. So and that combination with CFA charter or the conventional CFA, I think it's highly valued in the asset management industry if you look at the investment world. So that's a great combination. Apart from that, you can also, of course, look to, there are a lot of courses coming by, different universities now, postgraduate and undergraduate course, postgraduate specifically. Like I think there's one course by IIM Lucknow on sustainability management. It's an MBA program focused on sustainability. That's one of the interesting course. So you can look to pursue these courses to kind of demonstrate your interest and commitment towards this field, and definitely that should help your case as you pursue careers, not only within investments but with other key players. Apart from that, I think, as I mentioned, ESG is evolving rapidly. Reading, in addition to certification, you can demonstrate, I think, your interest via, kind of reading up a lot, knowing what's happening, listening to podcasts. That's another area to, kind of upgrade your skill set when it comes to, ESG investing field. So how do we go about hiring? And so you have to understand, like as I mentioned, there are conventional roles which are integrating ESG, and there are ESG focused career paths currently, I think, with a lot of firms, specifically with asset managers and owners. So we can go about these two paths differently. For a ESG portfolio management role, we may kind of look for certain conventional investment experience, and then kind of look for commitment or interest towards ESG domain. Same for researchers who are sitting within a particular portfolio management team or asset class team. Again, we look for conventional equity research experience for certain senior or mid-level roles, as well as again, commitment to ESG, right? And if you look at ESG only roles, or roles which are focused as a subject matter expert within the investment management firms, we kind of look for like very conventional, very I think a solid background or environmental, social, and governance domain, whether it's via, if you have a master's in environment sciences, or you have experience working in that domain, specifically as a maybe as a climate expert, or maybe as someone who's looking at social issues within a firm. So we look for those kind of career paths or background when we look for ESG only kind of roles. So in terms of the hiring process, how do we hire? Uh, uh, we prefer referrals, of course. So networking is a good idea always. Other than that, of course, conventional methods, we post roles, LinkedIn and other channels, and gather resumes. We also talk to, of course, recruiting vendors from time to time, and then we shortlist profiles, and also we look at some of the B school courses which are coming up fast, but there are very few, but they're coming up. New courses are coming, so we are evaluating them, almost every year, to see if there are interesting candidates over there. But I'll say primarily we are still hiring laterally, even for entry level roles. We haven't really, my experience, we haven't gone to campus recruiting, or we are not looking at campus recruiting exhaustively, but that may change as more schools come up with these courses, and there's a track record of these courses in the market. So once we shortlist the initial profiles, we have interviews with our senior analysts in the team, and then that is followed usually by case studies. That's a very important aspect of how do we hire in some of these roles, as it gives a good idea about analytical understanding as its commitment of a candidate towards the role and the firm. So that's an important aspect. I think more or less in all our hiring process now we are rolling out assignments and case studies. And then finally, there are rounds with the senior heads or member of the organization after preliminary rounds and screening. So that's the hiring process, I'll say, from asset management perspective. And finally, I'll talk about why kind of it makes sense to pursue a career in ESG investing. First of all, you should understand that everybody's aware there's a rising trend, and that trend is here to stay. That's not going anywhere. If any one thinking that ESG is a bubble, they're making a mistake, and they should probably hedge their bets. The ESG trend is here to stay for long run, and that's going to be the core of how we think about our investments, how firms think about their business strategies, and how banks and insurance operate. So it's gonna be on a very fast growth curve for foreseeable future. So it makes sense to kind of if you are interested in that domain, it's kind of a right time to think about switching into the ESG efforts area. And also the whole ecosystem is quite, the governments and regulators and regulatory ecosystem is changing rapidly. There's more support coming in from there, so that will definitely help the industry grow and become more mature. And it's not only public equities which is dominating the ESG efforts. It's the other asset classes are also catching up, like as I mentioned, private equity, sustainable debt, and they're all catching up to ESG trends to make sure they meet the investors' demand. So there's a lot of scope over there. And lastly, it's an opportunity for you to enable kind of positive social environmental impact while ensuring high returns for your clients. I mean, that can be very satisfactory. So these are all, I think, reasons I'll say it kind of makes sense to switch or to focus on ESG investing if you're thinking about it. And I'll say there are ample opportunities right now for you to kind of evaluate and switch now, so that you're in the best place to ride long-term growth curve on the ESG efforts perspective. So I think I'll stop there. That's it from my end. Monica, over to you for Q&A. Thank you.
Thank you so much, Lokesh, for the presentation. And as a reminder, you can submit your questions through the Q&A link at the bottom of the screen. So Lokesh, we have a lot of questions coming in, and I'd like to ask them in order and according to the relevance also. So like when we talk about ESG investing, it's environmental, social, and governance, but there is a lot of focus, or you can say there is a lot of talk about environmental issues in order of preference, if we say, rather than say social or governance issues. So what is your take on that? Like, is it like more only E factor which is going to take the direction forward, or and will these S and G be just hygiene factors, or they will also take prominence accordingly?
So that's a very good question. I'll say that E was definitely first among equals, as I highlighted, was and it still is. But after pandemic, the S and G have kind of come into forefront, specifically the social aspect. When it's to inequality and Black Lives Matter, all those movements kind of got that S factor into forefront, I think, after pandemic. So I think yes, E or the climate change is a big area of concern and focus. So that will dominate a lot of talks and inflows and asset under management. But having said that, the ESG or the convention, the S&G factors will also play an important role. But yeah, I think for foreseeable future, for next in the medium run, you'll see climate or the E kind of taking a lot of attention. But that doesn't mean the S&G factors would be left behind. I'll say that's why I said it's first among equals. A lot of focus on those areas as well, especially the social issues. Even in the fixed income area, social bonds are becoming quite popular. So they'll also, I mean, the whole ecosystem is rapidly growing, right? So if one of the factors may rise a bit more, but having said that, the other two areas are also garnering a lot of attention, and AUM and financing. So yeah, that's my answer to that.
Okay. So when you talk about like all the three factors coming equally and having a potential to come forward, so you talked about CFA's ESG certification. So does it cover all the three areas equally? And according to your perspective, does it give equal weightage to understanding of all the three factors, even environmental, along with social and governance factors?
Yes, I think there's an equal weightage to all these three factors. And most importantly, all these there's a lot of weightage in terms of how you are integrating all these three factors into valuation assets, and applying these three factors into portfolio construction techniques. So you will get equal exposure to all three via ESG certification. Yeah.
Can you provide some examples like on how to quantify ESG, because that is a very important issue, identifying the materiality and being able to quantify the factors. Say what criteria or metrics can be useful, or any sources from which we can understand those criteria or metrics to quantify the ESG factors while making an investment decision.
Sure. A lot of efforts have been going in that direction to ensure that when we are evaluating ESG factors, they are material to those firms when we are looking to invest. So, SAS or I think Sustainability Accounting Board, I mean, they have come up with certain standards where they've identified material issues for all the sectors and sub-industry subsectors. So you can go to SAS website, and then you can look at the materiality map for each company. You can figure out within a particular subsector which issues are most material, right? So for example, let's say for Coke, Coke, I'm just putting it out there, how they're managing their water, efficiency, water management is a key aspect of how they can generate better income or revenues. So if they are more efficient in managing their water resources, that will add to their bottom line. So that's one example, right? Of how water management can be a material issue for a firm like Coke, and there are a lot of other examples. I think if you look at SAS, if you can check out online, you'll find a lot of useful information over there. But I can assure you there are a lot of efforts being done, put in over there to identify material issues, so that investors doesn't feel like they are really not getting a return out of their investments.
And I think we can also combine it with the ESG disclosure scores, which we get from various databases also.
Yes. Yeah.
Okay. So next in line, we have a question there are some critics for ESG, especially when we talk about a famous personality, Professor Aswath Damodaran, who has brought out some blogs also, considering that ESG is like more hyped about, or it's like a scam. So how will you respond to that, considering those critics' response to ESG?
Well, I think it's fair and great that they are coming up with these critics, and it challenges the industry to do better and come up with better methods and valuation techniques so that they can justify incorporating ESG factors. So first of all, to skeptic, I'll say as asset owners have been driving, I have to understand why there's a demand from investors. There is genuine reasons, like it's more about balancing the long term and the short run, I think, returns. In the long run, if we do not consider these issues, if we do not put efforts on the climate change and we let it go as is, it will result in a lot of physical climate risk and other risks which will impact the economies as well as the financial performance of many corporations. So you have to understand it's a long-term effort or a long-term, I think, ecosystem, and that's where investors are coming from. That's why they're driving the demand. Having a short-term view will not help the perspective. And there are and I think a lot of studies have proven again and again, in the long run, ESG considerations help improve the firm's financial performance as well as the portfolio's performance. So I think if they are naysayers, I think they should relook at their perspective. That I think from long-term perspective, there's no doubt that these factors play an important role. On the short run, yeah, there is still jury out there, still debates, but if you're long-term investors, I think it's important that you consider these issues.
So it's a long-term game rather than a short-term horizon, which
yeah,
really will matter, provided whatever people say about it.
Yeah.
Okay. There are some career-related questions which I would like to take up. So there are different profiles which people have mentioned. So I will go one by one, asking how it is possible for them to enter into ESG profiles and the space. So there is a question from someone who is a CFA charter holder, but no experience in ESG, experience in only equity research. And this person wants to understand whether it is possible to shift to an ESG profile. And as you said, ESG certification or SASB certification, can they be helpful? And if you can throw some more light on what the certification will build in a particular individual, what skills and how much the industry will value the CFA charter holder, first of all, not in an ESG profile, but in an equity research profile. So probability of shifting to an ESG profile for such a person.
And that's a very good question. So first of all, you have to understand we're all learning ESG on a daily basis. It's rapidly evolving, right? So, and I was reading up a survey that I think 50% of the role in investment world are filled by people laterally with no ESG background as such. However, it was also mentioned in the survey that they all demonstrated strong interest and commitment. Now, how do you demonstrate strong interest? Your commitment is uh, uh, you have to either be able to talk about your credentials in some way on your resume. So I think ESG certification, it can help you from both perspective. It helps you build the knowledge as well as add credentials to your resume. It shows that you are committed to pursue that field, and that's what we are looking for, right? If you have a conventional equity research experience actually and coupled with strong interest in ESG efforts, I mean that's very valuable actually. And I'll say that, as I mentioned, everybody is learning and nobody understands ESG completely. It's changing rapidly. But if you have a good understanding, thorough basic understanding of basics and interest, I think that's what is required. And then how's your equity research experience or track record, then that matters. So when we're hiring, candidates, what we're looking for in candidates is, of course, in addition to interest in the ESG domain, the track record of how they have delivered in your previous roles, and that's important. If you are someone who's sincere, you've done well in your previous existing roles, you know what you have written on your resume, that helps, along with, if you can talk about trends in ESG, understand the products a bit, and understand the terms well. So that's what we are looking for.
Similarly, if there is a person who is not a CFA charter holder, but a very good, say, around 13, 15 years of experience in credit rating, sell-side equity research, and holds or is pursuing the certification, CFA Institute certification in ESG. So are the chances equivalent for that person also, given that he or she is not a charter holder?
Yes, I think that's there are equal chances. If you have a good track record in terms of your experience, that's definitely very valuable. And as again I'll repeating myself, if you can demonstrate strong commitment towards ESG, I think it'll be considered for the role. CFA charter is of course very valuable. It adds to the credential, but if it's not there, it doesn't mean that you will not get an opportunity. Yeah.
If someone is, say, in a direct renewable energy field, say utility scale developer, is it a possibility for him or her to shift to portfolio management side of ESG? And will it be direct, or it is required to pursue that certification or some courses?
Yeah, if you're coming from a conventional, I think ESG focused background, as I mentioned, there are two set of roles. We are looking for only ESG subject matter experts as well, who can complement the portfolio managers and researchers. So there are those career paths inside, majority, I think you'll see in a lot of asset management firms. So you can, I think, pursue those. For example, there are roles of the climate strategist, and where we are looking people who are experienced within that renewable energy field, who will understand these issues much better than any portfolio managers or research. I think you should go for those kind of roles, and then over the long run or medium run, you can kind of transition into a conventional portfolio manager or research role. If you are coming with if you're applying for a mid-level portfolio management role in ESG and doesn't have any portfolio management experience, it's going to be a little tricky. Having said that, if there are entry-level research roles, and if you are pursuing CFA charter, and if you have a background in conventional ESG areas, that can actually that for entry-level roles that works perfectly fine. I think you should be able to qualify. Yeah.
Similarly, for freshers preparing for CFA level 1, should they also think of this field, considering that they are eyeing for CFA? So similarly, you advise for them also?
Yeah, I think they should definitely consider this field. And as I mentioned, there are multiple roles in this domain. Getting into there right now and develop that expertise in addition to core investment skills, I think that will help your career in the long run. So it's a right time to enter. You can enter the investment world either ESG focused role and can develop investment expertise, or go to entry level investment roles. And over the long run, I think but I'll say the ESG type of roles are quite a lot right now in industry, so it makes sense to kind of think a bit strategically about it.
As per you, it's today is the time where if someone wants to enter, then building the right skills, tomorrow the competition may get tough, so the earlier is the better.
Yeah, that makes sense. Yeah.
And how does a typical day for an ESG analyst look like as compared to an equity research manager or an equity research analyst on the sell side or the buy side? How does an ESG analyst, what is a typical day? Because it's more of converting some qualitative data into numbers. So how does a typical work day for an analyst look like?
Yeah, so a typical day would be like, for example, let's say healthcare researcher or portfolio manager comes to certain advice on ESG issues for his portfolio, certain company that he's not sure how to think about ESG issues for this particular sector or company. So ESG analyst, he'll guide the portfolio manager or researcher in terms of these are the issues relevant right now. If you look at the industry, and that for this particular company, you should think about these issues, and they'll probably send us report to the portfolio managers complementing their conventional equity research methods. I think that's very common, and then they also focus on long-term strategic themes as to they also have to keep a track of what's happening from regulatory perspective, or what's happening in the industry, what other factors are being positioned. So there are tactical part of your role where on a day-to-day basis you'll have to guide portfolio managers and researchers and even the investment committees in terms of how should they think about ESG consideration when they're taking an investment decision. There's also a strategic part where you have to keep track of long-term regulatory evolution as well as subject matter evolution in those fields. So I think it's quite interesting. And as I mentioned, if you are really interested in investment world over the time, you can develop working with researchers and portfolio managers. You can develop expertise into conventional equity research or valuation technique, and can think of ultimately managing money. So there are if you want to be a portfolio manager or senior equity researcher or head, I mean, you can reach there via both ways.
There is a question regarding integration of ESG investment for investment manager under GIPS. So is it being considered?
Yes, as I mentioned, the materiality map. GIPS. Okay. Yeah, performance reporting, and I think it's a very important and critical area of how I think the ESG funds measure their performance. So of course GIPS definitely is very much relevant for the ESG funds and strategies. No dilution of the standards over there. In addition to that, there's a lot of emphasis when it comes to reporting in general. Apart from GIPS, there's a lot of demand and emphasis in terms of how the portfolio looks from certain ESG metrics, whether ESG, and now clients are also asking if we can, if the asset managers or ratings provider can report the SDG goals, if they can look at how their portfolio looks like from SDG goals perspective or sustainable development goals perspective. So there's a lot of demand in terms of measuring these ESG outcomes for the portfolios as well as reporting these metrics. And of course, GIPS standards, from my understanding, it remains equally important. And I'm not too I'm not an expert over there. I'm not too sure if there are specific initiatives being taken to tweak GIPS, but my understanding is that it's a standard which applies to all the funds and different style of funds and strategies, irrespective of style of investing.
There is also certification by FRM under the name of SRI. So how do you compare it with CFA Institute's ESG certification?
So I'll say if you are looking to go into risk management areas, it makes sense to pursue climate risk certificate. It's very much valid and important, because the climate risk is one of the biggest risks we are facing right now. So you'll definitely see a lot of demand. However, if you're looking to go into conventional ESG investing space, I think it makes sense to have the ESG certification domain. But yeah, SCR gets more niche, and our ESG certification, I'll say, while it's thorough, it can be applied in different settings. Yeah.
Okay, so this SRI certification by FRM covers more of environmental factors.
Yeah, and it's more focused on the risk side. So if you are pursuing a career investment risk, I think it's important that you can think about pursuing the certification by FRM. Yeah.
And there are certain modules on Coursera also by some universities. So do you think they cover the entire aspects?
Well, I haven't seen. There are, of course, online career paths or online kind of degrees which are as exhaustive as CFA's ESG certification. But some of the other modules I've seen, in my understanding, my knowledge, they are focused on certain topic or area instead of being very thorough. So either they'll touch upon the broad topics lightly, or they'll go deep into one area. But I don't think you have modules which cover everything exhaustively.
So you talk about asset owners and asset managers. Basically, asset owners are the insurance companies and others who are investing. But you also spoke about asset managers. So there's a question on what is your definition for an asset manager, and basically, when we talk about SSGA, what is the role which SSGA plays here in this profile?
Okay, so
are you on the buy side or on the sell side?
So asset owners are the primary owners of the money. I mean, if there's a pension fund, right, they are taking contributions from the pensioners or the participants in the program, and then the pension fund, they then allocate money across different strategies and funds, and that's where asset managers come in. That's where asset managers they offer their funds and strategies to asset owners so that they can manage their money in a holistic way. So both are kind of in the buy side. Some of the asset owners, they can choose to manage money in-house as well, but in general they all work with asset managers. They allocate their money to asset managers. So asset owners are more focused on asset allocation, where asset managers are offering these funds and strategies, and actually the fiduciary they have a fiduciary duty to invest on behalf of the asset owners. So I'll put them in one buy side ecosystem. I'll say asset owners are the highest at the end of the value chain, where they're kind of directly answerable to those pension participants or those insurance participants. So and on maybe big countries who have sovereign wealth funds, right, the taxpayers who are contributing to sovereign wealth funds, so they come at the top of the value chain over there, and then asset managers, and together they form a buy side ecosystem. Yeah.
There's a question that if there is a company which is getting downgraded so there is an importance of environmental factors, like you gave the example of water resources, which are very important considering this ESG space. So if a company is getting, there is a focus of downgrade on environmental factors, is it also equally probable that this company can be downgraded on social factors, say labor practices or unionization, etc.? So considering more focus towards environmental side, are social and governance also equally being considered when companies are downgraded by the agencies, or is it that they are skewed more towards the environmental and not towards, say, social or governance?
Well, I'll say all three metrics play an important role, and I think they're equally weighted. And whenever a final rating has been decided, all the three areas, all the material issues within those three areas are considered to kind of rate, the companies. Uh, so it's not that only one area decides the rating. The other areas are also equally important. So firm may get maybe doing poorly on environmental issues at the same time, maybe may not be doing well on the labor or labor or on the social issues perspective as well. So it's very much possible, yeah.
You mentioned that one of the key skills required under this is being tech savvy. So, what kind of technological technology skills or tools you can advise people to learn for entering into this domain?
I think ability to process huge amount of data, right, and be able to deduct a certain reasoning or conclusion out of processing that data, that's important. So from that perspective, uh, I think learning SQL or some programming languages which helps process huge amount of data. I think that's important. I think those are must skills, and of course this goes without saying, having advanced Excel skills is quite important, when you are dealing with large amount of data. And at the same time, I'll say that some of the other soft skills are equally important. Being a strong communicator, given so many changes are happening in the ESG field, so please do not ignore the soft skill part, as well as you have to bring a lot of stakeholders together in a changing ecosystem. So it's important to give equal emphasis on your communication and soft skills.
I'd like to take a few questions more because there are numbers. So probably we will take 2 or 3 questions more. So basically, there is a question on activism. So you talked about shareholder activism in ESG. So if you can explain, say with an example, what this implies in ESG investing, and if it has happened anywhere in India where shareholder activism has played a role in promoting ESG investing.
Yeah. I think a lot of asset managers and owners, they have the corporate governance and asset stewardship teams. Asset stewardship teams are responsible for kind of engaging with investing companies on certain ESG issues, and they can accordingly vote a proxy vote on their shareholders' behalf if they believe that ESG issues are not being considered as per the expectations. So that's ESG activism or engagement can be you know uh, initiated by both passive and active managers, as well as bondholders, since they are financial creditors or equity owners. They are of course the shareholders, so they can engage with this company and say, you need to improve on certain metrics, please disclose more, and you are not really probably getting rated higher, and why. So these are some of the questions the shareholders and the bondholders can go and ask, and they can push the investing companies to work more on that area. So I cannot really give a particular example for now. I mean, I should not comment. They can be proprietary in nature. It may not be like possible for me to comment on a particular company.
I think it's an upcoming phase, so we may, with time, this shareholder activism may play an important role going forward as more investors in India become aware about how this has to be incorporated in investing decisions. So one last follow-up question on the GARP certification. So there is another certification by GARP which is on CSR. So as compared to SRI, how is that CSR certification versus if you have any idea, versus the CFA ESG certification?
So I think you're talking about same, I think, climate risk certification by FRM and GARP. As I mentioned, I think if you are really focusing on the risk side, investment risk side, please, you can consider, climate risk is going to be very important. So you should consider pursuing a GARP's SCR. That's a very valuable course. However, if you are thinking of developing a holistic knowledge for a career in investment management, please think about pursuing CFA's ESG certification. It can give you solid footing, I think, on the climate issues as well, and can also teach you some of the evaluation, I think, and portfolio construction methods.
So whether it is SRI or CSR, both of them are more on the risk side rather than a holistic corporate finance view also and portfolio management view on ESG.
Yeah, I'm hopefully I'm not confusing because I'm aware of climate risk certification. I'm not sure of
No,
any other certification.
I
Okay.
got your point. I think our audience has also got the point. So I think we have covered all the questions, and thank you so much, Lokesh, for sharing your insights with us today. So as a reminder to our listeners, please do complete the evaluation survey that has appeared on your screen at the end of the session. CFA Institute and CFA Society India members may claim professional learning credits by logging in their online professional learning tracking tool. Do not forget to register for our upcoming webinars. We have some interesting webinars in which one of them is on 28th of July, which is Practitioners Insights Incorporating Climate Change Risks and Opportunities in Investment Analysis. So in line with today's career webinar, this will be a great insight from the view of a practitioner. And then on 4th of August, we have another career webinar, which is Career Insights into Valuation by Mr. Naveen Vora, CFA. On 7th of August, we have an in-person wealth management conference. We have 7th India Wealth Management Conference on 9th of August 2022. So do catch up if you can at Taj Santa Cruz, Mumbai. So these are the events you may register, and we like to network and catch up with us. Thank you very much for participating in today's webinar. Do keep in touch and do participate in next webinars also. Thank you so much.